To help set up the trading day, we welcome in Kevin Hincks, as always, co-host of Fast Market Live from the CBOE over in Chicago. Very good morning to you. Happy hump day, Kevin. Okay, so futures higher after Monday, or should say Tuesday's sell-off. We are in a shortened trading week. What are your thoughts about how we get set up for today? Of course, a critical day on the economic calendar as well.
Good morning, Sam. Yeah, a mixed day in terms of the futures, right? You've got the S&P higher. You've got the NASDAQ higher, but the Dow and Russell both lower in terms of futures this morning. Obviously, the S&P, the NASDAQ, driven by news on Google Alphabet, and that's also affecting Apple. So those two stocks, I have Google right now trading up about $14.50 pre-market. So big rally out of Google Alphabet this morning. Apple's following along as well. So good news there. We did get some. We're going to get a bunch of economic data. The pace is going to pick up a lot, as you know. We'll get JOLTS in just under an hour. We'll get factory orders. You mentioned that, and then we'll get a bunch of economic data tomorrow. Remember, we're kind of jamming 5 days of economic data into a 4-day work week, all culminating with non-farm payrolls and unemployment on Friday. So, yeah, a big week of economic data. We already got mortgage applications despite the 30-year mortgage dropping from 6.69 to 6.64, only modest bumps in the mortgage apps. Actually, the composite down 1.2%. Refis were up 0.9%, although that was FHA and VA refinances there. The regular ones were actually down. Purchases were down 3.1%. That said, both higher or both up over the last 12 months. So definitely a housing market that is screaming for lower interest rates. They're working their way off the 7 handle, but they need significantly lower to get that queue of lenders back into the market, Sam, and give a little breath to housing.
Yeah, so there could be another pivotal day for markets with that data coming through. You mentioned those rates. I'm just wondering how you're looking at the longer end. Of course, we are looking at a sort of fiscal undertone globally right now. It very much is a fixed income story internationally. But, I mean, the 30-year kissing 5%. How are you looking at that?
I think you're looking at a scenario where you've got the very short-term notes that are looking at potential Fed rate cuts. You've got a 30-year yield that's touching right around 5%. That's indicative probably of a strong U.S. economy. And then you've got the benchmark, the 10-year yield right in the middle. It seems to be hugging the 4.2, right now 4.23%. Range. So it's interesting. One looks like it's working its way lower, the shorter term, the 2-year. One looks like it's working its way higher and strengthening, the 30-year. And then the benchmark right in the middle, it's not sure what it wants to do. It's stuck right around 4.25, but at good, lower levels than we've seen in the past. So the overall U.S. economy, interesting in terms of how the note and bond market is playing out.
Yeah, and of course, one of the reasons for that steepening yield curve is some of the thoughts and questions around, obviously, the question of the Fed independence now. I mean, just wondering how you're looking at that, given that Bessent is beginning to interview Powell replacements. How should the market be viewing this?
I think Fed independence is an interesting political discussion term, but the Fed has always been political and how they've been appointed, right? Lael Brainerd, right, was in the Clinton campaign, and then she was made vice chair. Austin Goolsbee was in the Obama administration and then became, the Chicago Fed. So the fact that it's not independent is just, remember, there are people on the Fed that want lower interest rates. Christopher Waller's one of them. He's up for Fed chair. He thinks interest rates should be significantly lower. So I think that is one of those made up stories. Remember, there's 11 people that are up for the Fed chair. I've got the list right here. It's the two Kevins, Kevin Hassett, Kevin Warsh. Then it's the dissenters, Michelle Bowman and Christopher Waller. Scott Bessent is going to start interviewing them on Friday. So that should be, but there's a lot of solid people. James Bullard. Remember, Christopher Waller actually worked for James Bullard once in his career. So James Bullard, another solid candidate. And these people, by definition, are going to be independent, but they may have different views on interest rates. That's the difference. It's their views that the Trump administration is navigating towards, not having anything to do with politics, in my opinion, Sam.
Okay, and the next important data point, which of course will work into the Fed's calculus around some of that rate decision, is of course the JOLTS and what that's going to mean for the NFP as we look ahead as well to that. So what are you expecting to see from that number? What should traders be paying attention to this morning?
JOLTS, job openings, labor turnover survey, is a great way it's our first indication this week of the labor market. They're looking for about 7.375 million job openings. So that'll be our first look. Is the labor market expanding? Are there people looking for jobs? The general concern right now is, or the general theory is, no one's hiring, but also no one's firing. So we'll see. You're looking for, remember, it was 7.43 million a month ago. You're looking for any big moves is all you're looking for. If it comes in line right around 7.4 or slightly lower, I don't think the market will move much. It's Friday's number, non-farm payrolls, that will really be the market mover, because we get data on jobs and we get data on wages, inflation data. So that'll be the big number of the week for sure, Sam.
Okay, we'll be watching that number just in less than hours' time ahead of that crucial NFP report on Friday. Thanks, Kev, for getting us across all of that this morning.